Capital wars are here, and China is a great disruptor. It may be that Trump wins the trade wars. That's possible. Who knows? But he isn't necessarily going to win the capital wars. And the counterpart of the trade war is a capital war. The problem US got is that they kind of lost control of the US Treasury market, which is critical, and China is actually holding an ace card, and that ace card is $720 billion worth of US Treasuries. They are a major seller. Why don't they just be mischievous and sell it at the wrong time? There's a lot of potential volatility in the bond market, and if China can make that tougher, I think it may well try. So I think what we've seen in the last week may well be evidence of China selling bonds at the wrong time. The yield is backing up, and even though everyone is now convinced, seemingly, that there's going to be a recession, a 10-year yield is trading above its 200-day moving average, which doesn't seem to make any sense, except for the fact that supply is in excess of demand, and that supply may be coming from the East. The US has $37 trillion in debt, and government takes the $5 trillion but spends $7 trillion, so it's running a $2 trillion deficit. Interest expenses are over $1 trillion, and they're going to continue to grow as the US government has to refinance this debt at excessively higher interest rates. Back in the 1999 to 2000, 40% of the treasury market was owned by foreigners. It's now down to sub 20%, so there's been very dramatic changes in the supply and demand dynamics in the treasury market. Chinese are selling bonds to drive up interest rates to make things more difficult for the US. I think all evidence is pointing to the fact that you've got a lack of liquidity within the system right now, and it's kind of precarious. Ray Dalio said the US is on the brink of a recession. He was alluding to a possible depression. The odds are very high for a recession to happen. The reason for that would be lots of factors were stimulating the economy last year, and they're not stimulating the economy now. They're spent. So the economy is going to slow down, and that's what we've been saying since the end of last year. Watch out for a major slowdown in the US economy because these sorts of hidden stimuli are basically disappearing now. Now you've got that slowdown on top of a trade bomb that Trump has exploded, and that clearly is not going to be good as well. So I think a recession may not be priced into the stock market just yet. China has actually injected quite a lot of liquidity in the last 3 months, taking seasonally adjusted figures. What you've got is about 4.5 trillion yuan being injected into the system by the Chinese People's Bank. That's a significant amount of money, so they are definitely changing, and I think that their response to the tariff bomb or the trade bomb is that they're going to stimulate their economy, and they haven't been doing that for a long, long time. They've been trying to keep the yuan stable against the US dollar. So I think there's a change in China. So generally speaking, that should be a pretty good looking forward in China. There's a lot less fiscal space around for the governments to ease policy this time around because deficits are fatter, certainly in the US. And you've also got debt to GDP ratios, which are sky high relative to history. So it makes very difficult to actually ease through fiscal policy, which means that they may be the monetary authorities that are called on to slash rates. The problem is that it will be compound to the problem because lower interest rates stimulate debt. So it pushes the problem off further into the future. All financial disasters are brought on by an inability to refinance debt, and the US might be in that situation right now. So prepare for the biggest crash in our lifetime.